Good afternoon, ladies and gentlemen, and welcome one and all to today's Markets Now session, where we are going to be covering the pre-market session for this afternoon's non-farm payroll event. Now, usually I'd be doing these non-farm payroll events in real time. Unfortunately, I had a prior commitment set up for today at 1 p.m. Usually on NFP is usually on a Friday, isn't it? So we've had an overlap, but that's fine. What we're going to do today is it's going to be a quick session. Obviously, I've got to get off to my meeting, but I wanted to come on as sort of with as late as possible to the NFP event itself, so we don't get too much market movement before the NFP event takes place. What we're going to do is we're going to focus on a couple of FX instruments, gold, and the US indices. We're going to ultimately look at pending orders, limit orders across those, and then ultimately see what happens. So for those of you who are catching up on this in an hour's time or so, remember, risk today is at low percentage, at 0.15% rather than 0.25. We are going to be focusing on a pretty diversified group. We don't have any major USD CAD data out this afternoon, so as far as that's concerned, we're going to be focusing on the USD CAD, but we're also going to be focusing on the Euro USD as well. We are going to be focusing on gold, pending orders and limit orders, and then we're going to choose a couple of decent US indices, and that's going to be our trading pipeline for the day. So we'll start off at the bottom of the list then, USD CAD first and foremost. So the USD CAD at the moment, been a real range so far, and we can see down here non-farm employment change. We've got the CAD BOT, but there's no unemployment rate for the USD CAD today, so the Canadian dollar is not really going to find too much separation from the USD, and the dollar itself is going to be really taking the control here. I think taking the lead on price volatility this afternoon. Now, looking at this little retest here, this is actually quite an interesting point. If we drag this one back in time, you can see that is actually a little point of inflection there as well. It makes for quite a decent point of inflection, and therefore a break of structure area that we can utilize to enter into a trade. I was looking at this one up here, which is a fabulous level of liquidity. I mean, look at the size of that thing, right? Huge point of inflection. And if we get the break of structure through here from following the NFP, if it's quite bullish, then we can look at the run straight up to 136.16 as a point of call. So what we're going to do, pending order between there and there. Now for you guys, okay, it's going to be a bit different for me because obviously I'm going out. I won't be in the office. But you guys, you don't really want to be placing these pending orders immediately. So, right now or in the next half an hour, you want to be placing the pending orders at, say, 1 p.m. That's what you want to be focusing on. Get the orders in around 1 p.m. That's really how you can manage the risk. You don't want to be ticked into the trade prior to the news event and then running the risk of, getting stopped out before the news event even takes place. But I think this one looks pretty decent here. You could probably yield maybe a 1 to 2.1 net result. You might be looking at a 0.5, maybe 0.49% trade off of the back of that long in the USD versus the Canadian dollar this afternoon. Now, for the potential short here, we've got decent margin available as well. We will be using the low of this move down here as the breaker structure point to gain access to the short, with the target profit ultimately coming down to around this area in here, which is the sort of not the main point of inflection, but a nice point in which price action created a block before breaking structure and then rallying north. So I think that's got quite a decent margin in there, same as the long, and we will simply be looking at taking the short via the breaker structure down there, targeting the low, and stop loss will be situated a nice margin above that zone, yielding actually on this one a 1 to 2.47, so significantly increase over the long, which is looking quite nice. So that's the USD CAD setup for this afternoon. Now moving on to the euro versus the US dollar. At the moment, price consolidation going on, definitely in an upward trend here, there's no doubt about it. We go up to the daily time frame, get a bit of context. You can see that we've had a beautiful price rally. Haven't had a retest of this point of liquidity at 116.26 just yet. If you go back in time, we can see that there is a double point of inflection which had a retest, which is really nice. certainly would say there's commercial interest in the market at around that level in there. Bring that one across, and that could definitely work as a short trading margin for us today. The long is next point of call, which is going to be about there, which is not far away at all from where price is currently trading, which is a little bit of a shame. So if we go back down to the 15-minute time frame here, you can see we've got actually quite a significant trading margin, which will make for, I would say, quite the afternoon if the NFP event is actually worth trading. I say that because it's very often at the moment that we see stability in the data, and if the data is stable, we don't see much market volatility as a result, which can be a little bit boring. But I think these two trading margins in here are actually really nice. So what we could say is, you know, if we get a breakout below this low in here, okay, so a breakdown below the lowest point there, you could certainly be looking at a short in the EU down to this point of liquidity down there with your stop loss, a nice margin above that zone. And that's actually, guys, that's you're on 1 to 2.85, so that's actually really nice. Now don't forget, you will be sacrificing some of the risk reward in spread and slippage, and if the event is as big as it's, you know, supposed to be, very often at the moment we don't see that kind of volatility. It doesn't come out as a surprise, and so therefore there isn't much slippage that you need to worry about, but sometimes it can be the case. For the long, unfortunately today there is not really going to be the access to it. I mean, we can slim the chart up here and use that as the breaker structure. You do run the risk of getting a price reversal from this level in here, so that could be construed as a TRF, which is a technical risk factor. So if I put a level in there, you've got a pretty decent margin, I would say, you know, between the entry to that point. If you had the stop loss a nice margin below the zone, you'd probably be at about a 1-to-1 by the time the market reaches that 118.30 level. So that's actually satisfactory. If I bring that up to there, that's going to be a 1 to 2.3 trade. Net result, you're going to be looking at around 0.52 to 0.54% return. So that's pretty decent as well. And that's what I'll be looking at this afternoon for the euro dollar. So I'll download that one and send that out to you in a moment. Now moving on, we've got gold. So gold at the moment this week has actually been quite nice. It's not exactly yielded huge amounts of trading opportunities, but the volume has actually been there. As always with gold, we've got the same old highs, with the all-time high taking the top seat up there at 35. We've had a couple of attempts, we've failed each time, but we are looking at the continuation of ascending lows through here, which is forming a massive daily wedge, a rising wedge, which could be leading us to a big commercial breakout. We don't know about that yet, but it could well be. Now, if I look at where the price line is currently trading at the moment, say that is the point of liquidity that you really want to be breaking through the floor of, or breaking through the ceiling of, we then need to go down on the lower time frames to find the appropriate level for target profits. Now, a spike from surprise data in gold can really send it into a selling or buying frenzy. As I've said though, what it's been like recently, we don't get much of an impact at all, team. That's just the truth of it. So what I'd be doing here is actually taking that recent historic data and saying to myself, I don't really want to be stuck around in this one for too long. I want to be looking at an unoptimistic and realistic trading approach to gold. So perhaps something like this, maybe a little short through here down to there with a stop loss, nice margin above that zone there for a 1 to 2.5, which would be quite decent. So I quite like that short. For the long, it is a break close retest opportunity, so you want to be breaking through this area here. Let me just path this out for you guys. Breaking out, retesting, and then continuing. The problem is with this one is that the time the price reaches here, we're already going to be quite a significant way of the move. So, you know, it's just about being realistic with what to expect from this afternoon's NFP. I don't think it's going to be an explosive one necessarily. So I'd probably be looking for the break close retest, triggering the trade somewhere around maybe here, targeting up at around 33.81 with a stop loss there at around maybe, you know, 33.60-ish, and that's going to yield you a 1 to 2.1. But a break close and a retest is absolutely necessary of the high, which means that is going to be a at market order and not a pending order like the one down below. So we'll download that one. Next up, we're going to go into the US indices. So let's have a look at what we're dealing with today. So the margins that we've been working with all week, frankly, with these US indices are still the margins really that I would be going for. I'm going to make some slight adjustments though. So what we're going to do, draw these back again. We're going to see about having the high of the breakout that we want is going to be there. We've got this which is situated directly above, and that's going to be problematic. So what we really want to see from the US 30 Dow Jones is actually the breakout above this point in here, and then to go long to 44.78. So you're probably looking at something like, yeah, you're probably looking at something like that, to be honest. So maybe a 1 to 2.6 to 1 to 1 to 3 might be nice. For the short, much more realistic from where we're currently trading. You have the low there. That's going to be your breaker structure. Ultimately, the target profit is going to be down here at that inflection point, which means your margin for this afternoon short is going to be between this level, targeting this one, with a stop loss above there for a 1 to 2. That's not a bad little trade either. Okay, so the long is a lot more unrealistic, I would say, than the short, but it's the only one available. TRF for the long is there. All right, so that's that. That's the Dow Jones. Looking at the NAS 100. Quite a bit different than the Dow Jones. Honestly, I actually prefer this one. NAS 100 is looking quite nice. Major commercial area above price action at the moment. Real major one. So less of a chance of that one breaking through. We have an ascending level rising up through here. Looks like a break close retest of that's currently taking place. What I'm going to do is I'm actually going to manipulate this a little bit. I'm going to bring this one up to there instead of having it drop down where it was. And I'm going to have that as the short target. Now what I'm going to do is I'm going to draw in a breaker structure point, which is going to be a breaker structure of that low. And then the trading margin for the short is going to be a breaker structure there, targeting down here with a stop loss at about that level there for a 1 to 2.2. And that would be the short trade in the NAS 100. If you want to go long in the NAS 100, unfortunately, it's very much like the Dow Jones, actually, in a sense that the long isn't very feasible. The problem is, I would have said the long was looking great through there, but price action is already trading through there. So it's just not in the right place for us. It doesn't mean that we can't buy the market back when it comes back down to the lows here. But I would say that if the market can try and continue trading between these 2 points over the course of the next 45 minutes, your best bet is going to be taking the breaker structure trade between there and there. So you'll be looking at something like this. But these are quite tight trading parameters, guys. You know, make no mistake, they really are. We're not going for the big breakout trades today. We're going for the small stuff. If the market drops down through this level, I'm telling you right now, you have every chance, you have every capacity to short the big one down to there. You really do. There's no problem doing that. That yields a 1 to 3. So if we break the structural point down here, you can jump in for the short down to 22,470. But remember, I am about to leave. I'm not going to be here this afternoon, so you won't be with me in real time. Just heed what I'm saying. Follow the process, follow the trading plan, and you'll be absolutely fine. And again, maximum risk per position is at 0.15. That's 0.15% of your account per position. Very small amounts because news trading comes with inherent risk. We don't want to be taking on, extreme losses as a result. So I'm going to set up some pending orders. I'm going to get some bits in the market. I'm obviously not going to set up every pending order because I'm not going to be here to manage them. But I am going to select a few, place them in the market, and come back this afternoon and see what's happened. So I'm going to wrap things up there, guys. Short and sweet, but jam-packed full of info. just to tie off with the actual data and the forecast and everything, the US non-farm payrolls forecast is at 110k, coming down from 139k prior figure. We are looking at a reduction in jobs and in wage growth in everything in the US. It is very slowly but surely stagnating. I wouldn't be surprised if the unemployment rate was at 4.3 as well as forecasted. And, you know, and ultimately this isn't good for what it means in the broader sense. So I think, you know, if we miss the data, if it goes into double digits and we see a 90k or a 95k, it's going to be significantly bad for the US dollar. We're probably going to get quite the buy-in in gold, so do be aware of that. If it's a beat on the numbers, you're going to see some pretty decent volatility, I would say, in the stocks. I'm aiming for a short bias with a beat on the numbers for the stock markets. Sorry, not the stock markets, for the US dollar, and quite the sell-off with a beat on the numbers for the stock markets. All right, so take care, team. Have a fantastic day today. Good luck out there. Wish I could be there with you, of course. But I look forward to catching up with you this afternoon, seeing how everything went. So I'll catch you then. See you later. Bye-bye.